Right now, somewhere in America, a retired teacher is overpaying Medicare by $4,000 a year. She filed every tax return on time. She did nothing wrong. She just never heard of one form. That form exists. The government never told her about it. And today, I'm going to make sure you know it, along with 4 others just like it. Stay with me, because one of these could be costing you money right now. I'm Walter, and if you've been watching this channel, you know I don't do secrets or loopholes. What I do is this. I find the legitimate forms, elections, and adjustments that most retirees never know to file, and I explain them in plain English. Today we're covering 5. Let's start with the one that hits your bank account every single month, Form W-4P. Most people have never heard of it, but if you receive money from a pension, an annuity, or an IRA, this form controls how much of that money actually reaches you. Here's how it works. When you were working, your employer withheld taxes from your paycheck automatically. You didn't think about it, it just happened. Retirement changes that. Now it's on you to tell the administrator, take out this much for taxes. That instruction lives on Form W-4P. Here's where people quietly lose money. Many retirees never update this form after they retire. The default withholding kicks in, and it's often set too high. Too high doesn't mean you owe more. It means the government holds your money for you, interest-free for up to a year, and hands it back at tax time as a refund. That refund is not a gift. It's your money returning home late. Money that could have been covering your utility bill in February, your prescription in March, your groceries in April. A properly completed W-4P fixes that. More accurate withholding, more cash flow every single month. One caution, you don't want to swing too far the other way either. Too little withholding means a surprise tax bill in April. The goal is accuracy, not a loan to the government and not a nasty surprise. Review your W-4P every year, especially after any change in income. Now here's something most retirees don't realize. There's actually a second withholding form, and it applies to money that millions of people assume is completely tax-free. That form is next. Form W-4V. This one is about Social Security. By default, Social Security benefits arrive with 0 federal tax withheld. For some retirees, that's perfectly fine. For others, it's a quiet trap. Here's why. Depending on your total income, up to 85% of your Social Security benefit can become taxable. Many retirees discover this only when they receive a tax bill they weren't expecting. That's exactly what happened to Carol. Carol was a retired widow. She lived on Social Security and a small survivor pension. For years, nothing was withheld, and she never thought to question it. Then one year, her roof needed replacing. She pulled money from her retirement account to cover it. That single withdrawal pushed her income high enough that a large portion of her Social Security became taxable. Tax season arrived. The bill was far larger than she expected, not because she broke any rules, simply because no withholding had been happening and nobody warned her. Form W-4V solved that. It lets you request voluntary withholding from your Social Security payments in set percentages so there are no surprises. The goal isn't paying more. The goal is knowing what's coming. Now we get to the form that most people, even experienced retirees, don't know exists, and it could be the most valuable one on this list. Form SSA 44. To understand why this matters, you need to know about something called IRMAA, Income-Related Monthly Adjustment Amount. Here's the simple version. If Medicare thinks your income is above a certain threshold, they add a surcharge to your Part B premium. The higher your income, the bigger the surcharge. The problem? Medicare looks backward. It doesn't look at what you earn now, it looks at your tax return from 2 years ago. Think about what that means. You retired last year. Your income dropped significantly. You're living on a fraction of what you made while working. But Medicare is still looking at your old salary and charging you premiums based on income you no longer have. Frank and Susan knew exactly this feeling. Frank retired after 38 years in engineering. Susan stepped away from education the same year. Their combined income dropped dramatically. Months later, they were shocked to see Medicare charges that seemed far too high. They assumed nothing could be done. They were wrong. A financial advisor told them about Form SSA 44. It exists specifically for situations like theirs, letting you notify Medicare of a life-changing event like retirement that substantially reduced your income. They submitted the form with documentation. The premiums were adjusted. The relief wasn't just financial. It was the relief of finally understanding a system that had felt completely opaque. If you've retired recently, or if your income has dropped significantly in the past 2 years, SSA 44 is worth reviewing. Not everyone qualifies, but people who do qualify almost never know this option exists. This next form tracks something that, if ignored, can cause you to pay taxes twice on the same money. Form 8606. Here's the plain English version. Some retirement contributions were tax deductible when you made them. Others were not. You paid tax on that money before it went into the account. When you made after-tax contributions, that creates what's called basis. Think of basis as your proof that the IRS already collected its share of that money. Without Form 8606 on record, the IRS has no way of knowing which dollars were already taxed. When you start taking withdrawals in retirement, the entire amount can appear taxable, even the portion that was already taxed years ago. That's double taxation, and it's completely avoidable. The challenge is time. Many people made these contributions 10, 20, even 30 years ago. Records get lost, tax preparers retire, people move, memories fade. If there's any chance you made non-deductible IRA contributions at any point in your working life, it is worth sitting down with a tax professional and reviewing your records carefully. Recovering documentation now is hard. Recovering it after the fact is much harder. And finally, a form that doesn't save you money directly, but helps you catch the mistakes that cost it. Form 1040-SR. The SR stands for senior. It serves the same purpose as a standard federal tax return, but it was redesigned specifically for older taxpayers. Larger print, cleaner layout, with sections tailored to retirement income sources like Social Security, pensions, and IRA withdrawals. Here's why it matters more than people think. Most retirees hand their return to a preparer and sign where they're told to. They trust the numbers are right. Most of the time, they are. But mistakes happen. Income gets entered incorrectly. Deductions are overlooked. The basis we just talked about gets ignored. The Form 8606 that should have been filed isn't. The more clearly you can read your own return, the more likely you are to catch errors before they become expensive ones. Form 1040-SR is designed to make that easier. 5 forms, all legitimate, all designed to help retirees pay exactly what they owe, no more, no less. W4P, your pension and IRA withholding. W4V, voluntary withholding on Social Security. SSA 44, appealing Medicare premiums after a major life change. Form 8606, protecting against double taxation on IRA withdrawals. Form 1040-SR, a return designed to keep you in the picture. None of these are loopholes. None of them are aggressive. They are simply the forms the system provides, and that the system assumes you already know about. Retirement finances rarely collapse from one big mistake. They erode through small oversights repeated over years. A form never filed. A withholding election never updated. A premium surcharge never questioned. Over 10 years? 15? The numbers add up in ways that are painful to calculate in hindsight. You spent decades building this retirement. You earned every dollar through work, sacrifice, and patience. You deserve to understand the systems that govern what happens to that money now. So here's what I'll ask you to do this week. Pick one of these forms, just one. Look up whether it applies to your situation. Talk to a qualified tax advisor or financial professional if you need help. You don't have to solve everything today. You just have to start. If this helped you, share it with a sibling, a neighbor, a friend sorting through retirement paperwork at a kitchen table right now. One form, filed correctly, can make a real difference. That's why Walter Retires exists. This is general educational information only, not legal, tax, or financial advice. Individual circumstances vary. Tax laws and Medicare rules change. Always verify current information and consult a qualified professional before making decisions based on anything discussed today.